Hi, welcome to Finance IT course of NIPA. I am KT Kim from Industrial Bank of Korea, IBK. In this session, we will go over digital technology in compliance and regulation technology, also called as Regtech. Bank is one of the most regulated industry and government supervision is very thorough. Banks use digital technology to reinforce compliance activities. We will go over 4 types of compliance activities supported by technology. Regtech is a term shortened from regulation and technology that helps banks and supervisors keep compliance faster and precise. With Regtech, heavily regulated organizations like banks can maintain institution credibility with ease. Complaint management is a major compliance item for banks. Banks are obliged to disclose how it handles complaints by Financial Consumer Protection Act of Korea. Google Play Store app reviews are difficult to browse. If you don't reply respectively, it soon becomes a heavy complaint. Banks use software robots to keep track of these complaints. This review robot uses robotic process automation to scroll down app reviews and collect serious complaints, then forward them to customer center to analyze and respond. Financial supervisor can use machine reading comprehension technology to find defects from terms and conditions T&C of new financial products. When a bank builds a new financial product, it has to submit T&C to financial supervisors at least 1 month before its release. More than 100 T&Cs a month are reviewed to find critical clauses missing or misleading ones. An automatic defect finding can be a relief for the first draft review. Financial supervisors use crawling program and text analysis to find scam-related keywords and sentences on advertisement and bulletin board from major internet portals. Automated crawling program look for fraudulent words and spam phrases from these advertisements to prevent senior citizens and young teens from becoming victims of illegal loans and savings. Technology also helps banks monitoring and preventing money laundering by criminals. Banks screen names against international watch list filtering. Anti-money laundering activities are important for banks, for a great amount of fine is imposed when banks are involved in illegal criminal activities. Banks use optical character recognition (OCR) and machine reading technology to extract terms such as seller, buyer, shipper, and seaport from trade documents. It compares them with wanted names list for their similarity. For example, if seller name resembles Kim Jong-un of North Korea, banks reject to issue letter of credit or to execute wire transfer and ask for supplementary evidence that this transaction is legit. Criminals elevated money laundering scheme into a new level. They now use trade-based money laundering (TBML), and most popular techniques are mispricing, multiple invoices, false description, and phantom shipments. It is very difficult for banks to track non-financial trade activities outside its boundaries around the world. So banks use risk-based intelligence, such as trade information analysis, to identify these hidden activities. When the bank receives wire transfer related to a trade transaction, bank compares trade document contents with external TBML database to check consistency and identify risky customers. Banks also monitor suspicious activities by reviewing numerous accounts transactions triggered by fraudulent scenario. For example, when a customer withdraws 20 million won in cash, banks monitor where it was spent, such as salary payment, bill payment, overseas trade payment, and so on. If there seems no use of this cash after this withdrawal, banks have to report this to financial supervisory, we call this suspicious transaction report. It needs to be done in the shortest amount of time, so banks use robots to do this automated task, tracking related accounts activities. To keep financial transparency, banks have to be sure the customer is who he say he is. While AML investigate transactions, Know Your Customer (KYC) focuses on identifying who the person really is. Impersonation can be prevented with multiple identification, from ID card, biometrics, and composite verifications. KYC concept is familiar to Koreans who open banks account on mobile phone. Banks make sure you are who you are by 3 A's of verification, and it only takes 5 minutes without branch visit. Here's how it works. First, check your mobile carrier registration. Second, take a picture of your ID card and compare with government-registered data. Then the bank sends you one Korean won with 4-digit number on your bank account. You reply what those numbers are, then your account is created and ready to use mobile banking on the go. Now many people use biometrics to unlock mobile phones since iPhone and Samsung have equipped fingerprint verification. Impersonation is difficult when your own biometrics such as fingerprint, face, and iris are keys to your banking service. Combined with biometrics and your designated mobile phone, it is an easy way to prove who you really are, and banks find it very appealing in terms of KYC process. These methods are easy to use and provide safe banking environment at the same time. To prevent fraud and protect customer, banks use real-time fraud detection to help maintain safer financial environment. Banks ask customer for additional verification when transaction pattern is similar to fraud scenario. And banks also provide call fraud detection to proactively protect elderly customers who are prone to voice fraud. Banks ask customers to provide additional verification when suspicious transactions are detected. When you make a wire transfer to a new account or withdraw same amount of money for several times, mobile banking app asks you to go through another step to avoid ID theft and mobile phone hacking. Banks will send one-time passcode to your phone or call you and ask you to punch in the number on the screen. Banks let you log on only with a designated device or cross-check if your information is same as in mobile carrier registration. Call fraud detection app helps receiver avoid fraudulent calls with AI technology that is called speech-to-text and text analysis. When unknown call is received, this app is activated and convert voice record into series of text sentences. Then they are compared with previous fraud scripts to determine its similarity. When it exceeds the scam probability threshold, receiver is warned to hang up the phone. This app from IBK received government subsidy for its public feature, and now it is pre-installed when you buy a Samsung smartphone. Characteristics that only banks have and fintechs do not are branch and ATM. Digital technology also changes this unique banking environment. What digital technology is used in ATM and branch? We will find in the next session. Thank you for watching.